Review of commodity markets. Greetings. In the commodity market overview, we describe all the events of interest for various assets, such as oil, silver, gold, platinum, and so on. What is it for? Speculation in commodities and investments in precious metals are ready to justify themselves if you know all the necessary subtleties, which will be discussed in this review. Platinum. Platinum does not leave without joy, because the price has almost reached 1,300. I leave the trade open. There are several options for managing position. Someone prefers to move stop losses to break even. Someone works with a pure mathematical expectation of their trades. The main thing here is to understand yourself and understand what is more psychologically comfortable for you. I personally am ready to lose the planned amount of the trade, and will patiently wait for the price of platinum to touch the level of 1,300. I advise you the same. Now the movement has slowed down a little, but I am ready to patiently wait for the price to reach the designated target in terms of the amplitude of volatility. He who knows how to wait will wait for more. I strongly advise against jerking if you entered a trade with me on breaking the triangle. Oil brand. On oil, there is a danger of a reversal very close. What's left to wait for oil? I expect a correctional wave. It is not in my trading system to go against the main trend, but intraday traders can use this opportunity if they find the correct reversal signal. So far, the price is only hinting at a bearish short pin bar that formed in a wave-like price movement. The oil price is moving in waves and now is the time to start falling. I highly recommend closing midterm positions and short-term traders preparing for a trend reversal. Gold. Congratulations to all those who were able to take advantage of past recommendations to buy gold at 1,800. What can be said about gold now? This is a medium, long-term position at the moment to protect your assets from inflation, which could overtake the whole world. The U.S. Federal Reserve, the ECB, as well as a number of central banks of the developed countries of the world were faced with a choice, either to give full swing to deflation when fiat money becomes stronger and stronger, which does not lead to favorable consequences for small businesses, or start printing new money in order to systematically devalue it for inflation, which will have a bad effect on consumers. The choice of the central bank of the developed countries of the world is not easy. The liquidity trap crisis leaves little choice. Both that and that step can lead to adverse consequences, and therefore I expect a fundamental increase in the price of gold. The crisis is not over yet and the most interesting will be ahead.